Well, let's continue. I want to go on right away to early stage home buying demand jumps to its highest level in 15 months.
That's awesome.
Despite high mortgage rates. So here's this demand thing. This is from Redfin. So here's the demand thing back again. And so they're saying that their home buyer demand index, which is seasonally adjusted, rose 17% year over year. That's a lot. That's enough to like celebrate. If we had let's say we had a 17% increase of our gross sales this year, that would be wonderful, wouldn't it?
Oh yeah, of course.
So people should be celebrating this. But like we were just talking about, how much of the demand is being driven by price? How much of it is being driven by rate? How much is it being driven by the election outcome? Yeah. These are all reasons that we had been given prior to the election that people were either taking action or waiting to do the thing of buying a home.
Yeah.
I think it goes back to what Will say. When people want something, they're going to go out and get it regardless of, the price or what they have to do. They'll figure out a way. And I think that it shows in the numbers because if if we're seeing high rates, prices are being the same and people are still purchasing more than last year, I mean, people are either fed up with it or they're like, hey, this is the new norm.
Yeah.
This is the new norm, which is something similar, like funny that I've been seeing a lot more since we've been talking about that, how they're conditioning people, the new norm. And little by little, they're just putting things out there to kind of condition people to say, this is the new norm. And I see it.
Oh, yeah, because, we haven't said the word transitory in quite a long time.
It's not transitory anymore.
I guess it's not transitory. I mean, yell at me in the comments for that one, but that seems to have gone. Where's soft landing, by the way? Have you guys heard that recently? I haven't heard that recently
not anymore.
Either.
We've landed.
Normalization. I actually wrote a note about this for later in this article because I think some of the Fed speak we're hearing from Jerome Powell and other Fed members is to try to normalize where we're at. Yeah. Like this whole, it's going to go, they ain't going back. We're not going to see mortgage rates in the twos. Yeah. I'm sorry. We're not going to see that, at least in the foreseeable future. Again, unless there's some like cataclysmic financial event or something that happens that causes us to have to do that. It's not going to happen. And so I'm kind of tired of this kind of talking point where it's, pent-up demand. And it's because essentially that's just code for FOMO, in my opinion.
Yeah,
it's just
of course.
People had fear of missing out and they're just buying. Yeah. Now, I understand there's real life reasons people have to buy a house. You got to change a job, career change, divorce, getting married, having kids, aging out, whatever the situation is. Those are always going to exist. Yeah. But like that willing buyer who is now saying, you know what? I guess it just is what it is, and I'm going to go ahead and step into the market because they feel like they've missed out, and they should have maybe they regret looking back 12 months, 24 months ago. Oh, I should have done this.
I should have done
that. Now
I
got to.
Exactly. Well, and that's not necessarily for everyone. Now that we're having a lot more homes available, it gives the people the opportunity to really look and see what they want, right? It's kind of like going to a dealership. If there's a lack of cars in there, they may just be like, do I really need that? Now they'll just be like, do I really need that?
Start rationalizing.
Can't be as picky.
I may just wait, And so I think that's what's happening a lot with people because we've been seeing a lot of people cancel on the home that they thought, so they put an offer in there.
You know what? That's a great point.
Another one pops out. It's like, maybe I don't want that one. I think I like this. So they're seeing again that they have opportunities. And I think a lot more people are coming out. I would say I would agree with this because there is more homes available and therefore it's triggering more people to get approved. Right. But that doesn't necessarily mean that their transactions are closing.
I feel that, to go on to what you said, once they get approved, they're not shopping and buying the next following day, but they're entering the market to start seeing what's available.
Correct.
And I think as we're seeing this data, they're probably hearing it too. More inventory. There's going to be more houses coming up. And I think that also plays a part. Well, hey, I see what's out there right now. I like this one, but it's not like something that I'm like, oh, for sure going to put all my eggs in that basket.
Correct.
So I'm like, maybe I could wait out a little bit longer. My situation isn't that bad. And I could still wait to see if there's going to be more inventory down the line. It looks like inventory is rising, so I think people are looking at it from like, hey, well, let's see if more comes out, and let's wait.
Yeah. Well, you just saw we closed one in Pittsburgh.
Yeah.
$757,000, and she is self-employed, and the rate we locked her in was at 8.25 because it's self-employed. It was pretty much
comes with the territory.
It was like pretty much stated income, right? And they have these loans, and she didn't care. I want that house. Yeah. I'll put 20% down, no problem. We got it done. And by the way, Pittsburgh, if you guys know this, the transfer tax here in San Diego,
say that.
It's like I've seen it. The highest is like $2,400, and
you're
usually
like,
the seller actually will give a credit for that. in Pittsburgh on a 757 was $37,600, $800.
My jaw dropped when you told me that. Was that Monday? It was Tuesday.
Yeah,
earlier.
exactly.
When you told me that, I was like, what?
That's like a whole bunch of property taxes for years here.
So you come up with your
Like 2, maybe
20% down, right?
That's 30.
In addition, you have to come up with that. Those are your closing costs. You can't finance them in.
That's crazy,
Well,
dude.
that's on top of what you're paying still on closing costs.
Yeah,
right?
yeah,
Correct.
yeah. Closing cost, down payment, and transfer
Yeah.
taxes.
Yeah.
That's crazy.
So you're talking about 38 with closing
That's like another
costs, all
5%.
that,
That's like another 5% on 750?
58,000 in
Yeah.
just closing cost and taxes.
And everything.
Dude, that's crazy. So, okay,
I
so
thought I'd share that.
what are you guys telling people in this kind of environment right now where you're saying like, hey, look, rates are where they're at, prices where they're at, inventory, you may have more selection. I kind of hear you saying that without overtly saying it. What are some of the other talking points you guys are helping people with to help them overcome this either FOMO or, needing to just kind of deal with the reality of what we're facing?
Yeah. For me, it's going back to the old basics many years ago. Everything was, for me, I used to tell people, like, if you're looking for a home, drive around the home, drive around the area, understand your area, know your schools. If you have, kids in a certain age, go and just drive around. Get the feel of it before you even say, yes, I do to this home. Because remember, the I do is a long-term commitment, and sometimes you think it's going to be a year and you're in there. And if you're not happy, that year may feel like a 5-10 year problem.
Right.
Yeah. And if you do sell that property, I just had a client go through the same thing. I was telling them, listen, don't go through the condo. You could afford a home. You're already in that area. Go to a home. Fast forward, not even a year. Guess what he did? Put the house on the market. He took a $25,000 hit and is now renting because he's just going to rent right now for a little bit to recuperate that loss.
Yeah.
And now he's like, I should have just listened, right? I shouldn't have gone with that 2-bedroom thinking, oh, this is my home. This is where I'm going to be. Well, fast forward, he has 2 kids, another one on the way. That home no longer works.
Yeah.
That townhome.
Yeah.
So really, like, I suggest with people, just pay attention, like fast forward yourself, visualize yourself there. So I think with that information, that advice, people, they're not so quick to want to make that decision, put that offer. It's making them think. And that's what we have right now with a lot of our clients is like, they're really thinking it over.
Okay.
No, and I follow along with that. It's like, look at your situation, look at your options, and then fast forward. Is that purchase, is that fitting your goals in the next couple of years? Are you going to be able to make that payment? Are you okay with holding that house for, 3-4 years? Because likelihood of you, moving in that time span is going to be very minimal. So I think just understanding your situation, and as long as you're able to make that payment right now comfortably, you have some relief down the line. The downside of that is if you wait, you're going to basically pay at a higher price of the house, and you end up probably either paying a little bit more or the same. So there's really not much savings, but you'll start, building that, responsibility. If I have the house down the line, you'll be able to, manage that and use that as a stepping stool if you're unable to.
However you feel, right?
Yeah. Well, and the reason I asked the question is because I know that you are uniquely answering specific things for people based on their circumstance, but also the kind of the market environment is the market environment for everyone involved, but they have different reasons for what they are trying to overcome, whether it's behavioral, psychological, affordability, life circumstance, that kind of thing. So it's important for me, for other people to know, because on the receiving side of like watching podcasts and shows, the person who made that content, they don't always know that I might be actually curious about, well, what problem are you solving in that same way? And that's why I want you guys to be able to talk about those things, is so that, others who are watching this go, you know what, that is my situation, or that sounds like my situation. Oh, I could actually do this, and they can step into that thing, or no, maybe I shouldn't right now. Not to self-select out, but like if you are definitely know this is not the right time, then that's fine. Do the right thing when it is the right time.
Yeah, no, and that's why one of the things how we prepare, our clients is obviously we give them the tools to go out there and to make the best decisions, for them and their families. So we give them a calculator sheet to it with 3 comparisons. We give them what their max is, what their max is, and then we give them the first 2 scenarios so they can put in there. So if let's say we got them approved at $900,000, they only need $750. Plug those numbers in. If it has an HOA, if it has an additional property tax, plug those numbers in to really give you the best idea possible of what that payment's going to look like before saying I do.
So last question on this one, guys, from Redfin, because it's sourced by Redfin, so it's kind of their own internal survey, which they're publicizing. Do you think that the respondents that they got saying that it's, they had a 17% increase in their demand index, do you think that's across the board, or do you think that's just selectively them? Do you think the same would be true if it was Zillow asking the question, or if it was, Keller Williams asking the question? Do you think it's representative of buyer sentiment as a whole, or you think it's just they selectively are having this kind of opinion?
I'd like to see other people do the same polls, but I think it might be just to them because depending on who they're polling or who they're getting the information from, somebody else might look at a different area and get different numbers. So,
but the thing is, Zillow and Redfin, they have the highest people that go in there and view of homes, right? So I think that would be good data because they are like the two top companies that actually get a lot of buyers that go in there, search for homes, actually apply through it and all that stuff. So I would say it's pretty accurate information considering that they are one of the two biggest freaking...
Yeah, and they're basically like the Google of house searches.
That's correct. They are. It's Zillow first, and then I would say it's going to be Redfin.
Redfin,
So I think the data is just, it's going to go there, but I mean, they're getting it. But remember, the buying, people go there to search for homes. That doesn't necessarily they close homes with them
or qualify.
So, let's just say they have 100 homes that people bought in that month. Not all 100 people went through Redfin. They've gone somewhere else too, So who knows? I think the data is pretty good, but it's not going to be accurate to the T like that.
Yeah, I think it's representative. Even if it's a plus or minus 5% variance, it could be as low as 12 or as high as 22. But I think that their sample size is large enough that it's qualifiable.
That's
right?
correct.
I think it's good enough that I go, you know what? That makes sense about 17% because tracking with what we just saw is inventory increasing like 19%. If inventory is increasing and then you're claiming it's been pent up demand, that's going to cause people to come forward. Well, then almost an equivalent amount of people would have to come forward to absorb that demand.
Exactly.
That's kind of where I was going. I wanted to hear you guys before I said that.
Yeah.
So